Hello Oracles, Oracle Tim here from Oracle Investments. You know what this shirt means. This shirt means that you guys are the most amazing subscribers ever. Thank you so much. We have hit 500 subscribers. You guys are all awesome. If you have not subscribed, please do so. If you find this helpful at all and would like to share this information with friends, also do that as well. In today's Stock Talk, we're going to discuss a little bit about price targets and what they mean when analysts come out with them, and the RSI, that is the Relative Strength Index. It's a chart that you can see on pretty much most graphs that you're trading on. A lot of times we see price targets come out for stocks. It's usually right after earnings, and when they come out, a lot of people get excited. You know, if the price target goes up, you'll see the price of the stock usually jump almost ironically to the price of that price target. What you need to realize, though, is that price target is a 12-month price target. This is what a lot of analysts are they're guessing and predicting that the stock price is going to be at this certain level in the next 12 months, not right now. And so more often than not, you will see the price of a stock shoot up when the price targets come out, and then it tapers down a little bit just to kind of cool off. So if you see this, kind of hold yourself back. You know, sometimes it's a judgment call, see what the price target is, but if it's a relatively incremental price target, and you're looking to buy it, great to buy because you want to get into the stock. Let it cool off a little bit. You'll have that price come down some. A few notable thing with price targets is they don't have to come out after earnings. And if you see a lot of analysts come out with price target increases prior to earnings, that is a really bullish sign for that stock, because that means that the analysts are all in agreement thinking, you know what, this stock is going to do really well. They're going to blow out earnings, and we are confident putting out our price targets before we even get to see their earnings. Now, personally, for me, when it comes to price targets, they're kind of finicky because they can come out with any arbitrary numbers that they want to. They have all sorts of different calculations and formulas that go into them. So what I look at is trends. And if I'm seeing all of the trends for price targets going up, then that to me is a bullish sign to get into this stock. Because even when the bears are going from a price target of, let's say, 100 to 150, that's a 50% price increase. So when bears are increasing their price targets, still a good bullish sign. Conversely, when you see the things going the other way, which we'll discuss about Square a little bit later, when you see even bulls pull back their price targets, that's just kind of keep an eye on the stock. It's kind of probably not where everybody thought it was going to be going, or something changed with the formulations and the business itself. Some huge news we had to end the week was the Pfizer pill coming out for COVID. This should bode well, very well, for recovery stocks and travel stocks in particular. And so Airbnb, ABNB here, saw a massive run-up. They blew out earnings, and then on top of it, now we've got the Pfizer pill. So travel stocks are going to do well. But if you look at the RSI down there at 78, anything over a 70 usually means that is a overbought. And so I can definitely see this cooling off quite a bit. Analysts have price targets on Airbnb between 179 and 215 at the moment. So I'm kind of anticipating ABNB to cool off, probably settle down around the 170 mark for a good support. And from there, it'll hit 170 and just kind of float there for a little while, trade sideways, and potentially every once in a while push up over 200. But I think we're going to wait till springtime before we really see this stock take off. Disney is another stock and another company that is going to do very well with this Pfizer pill coming out. Between their parks reopening, cruises getting back online, and their movies going back into production more full scale now, Disney, I believe, is going to be pushing over 200 come springtime, and I think we're going to see a slow and steady growth on Disney. Disney's a huge company, doesn't move quickly. RSI is right in the middle, not overbought, not oversold, and it's been trading sideways, you can see, for the last year. So, I bought in at around 154, shot up like the next day. I could have sold it, didn't. I'm playing Disney long term. So for me, I'm just going to let this one ride out, see if they come back with dividends again, and see from there what I want to do with this stock. And a little stock tip I got from Oracle Dad, aka my father, who is my Oracle and has taught me a lot about what I know for stock trading, tipped me into Boeing, BA. You know, Boeing used to be a $300 to $400 stock and is now trading around the $224 level, and that's a pretty solid support for it. RSI is right in the middle as well. So looking at this stock, it's probably a great buying opportunity with the Pfizer pill coming out. Travel is going to be reopening again, and in the next 6 months, I can really see this stock pushing up to about 300 again. And the last stock I want to talk about is Square. Now, we talked about earnings for Square this past week. They missed a little bit on earnings. Stock dipped down a little bit. And again, the price targets came out, and some of the bull analysts for Square dropped their price targets down. So for me, that's a bearish sign. The stock has been trading sideways for a year. Its valuation is very stretched. The RSI is pushing a little bit lower, so I think this might sell off down to about the 220 mark. We'll probably find support between 220 and 225. And then from there, just kind of trade sideways still for the next, 6 months. Their pipeline isn't long, but it's like this is a long-term play. This is fintech, that's financial tech, that going forward is going to be one of the big players in the financial sector. But we still have some time before we get there, so this stock may trade sideways in the meantime. One of the strategies I use for my trading now is saving up, making sure I have between 5 and 10% of my portfolio be cash. The reason I like to do that is because if there are ever any dips, like for instance, Tesla, when it dips down 1%, I'll add a little bit more to it. When it dips down, on a daily basis, I will add more. I add more every day. And I like to keep that cash there for the dips. You never know when there's going to be some random crazy news that comes out, like a pandemic, and all of a sudden everything is going to crash down. Most of the time, 99.9% of the time, when you see a market pull back like that, is a good buying opportunity. You can never predict the future. You don't know if it's going to keep going down, if it's going to rebound and come back right away. So I use this cash on hand to just nibble away at it. And if I see it really dipping hard, I'll just put a little bit bigger nibbles onto it. And that's how I use my cash in trading. It took a lot of discipline to get this cash built up to this point, because I used to always just be like, oh, I got some cash and spend. And the amount of times I would kick myself in the butt because I never had the cash when those big dips came. I was like, and you can really capitalize on these dips because you get a good stock. Let's say, for instance, an Airbnb, the stock trading around the 150 to 160 mark. All of a sudden we have like 3 red days in a row and the thing pulls back down to 130. And you know full well this stock should not be trading at 130. And so you go ahead and you buy it. But if you don't have that cash, you can't buy it. The only way you can buy it is if you sell something else off. And chances are, if Airbnb is that low, everything is that low because the entire market pulled back. So you're going to lose profits on another stock, or you're going to end up selling it for a loss just so you can get in more Airbnb. That is my example. And I've done that myself. Airbnb is actually one of them. ENPH I missed out on when that pulled back to 120. So for me, I like to have this cash on hand. I can take advantage of these opportunities when they come along, and then I can just really capitalize on it. Because for instance, I trained myself. It took 2 months to finally get myself to the cash reserves that I wanted. And then I saw ENPH dip down to 130. I bought that, and now it's pushing over 230. So yes, it makes a huge difference, and it is totally worth the discipline to just not buy anything for 2 months and get those cash reserves saved up. Thank you all so much for watching. Again, thank you for 500 subscribers. You guys are the best. I love all of your feedback. Let me know if there's any stocks you would like me to discuss on here. I can go through some analysis for you on them. If you have any other strategies that you would like me to go over, or if you can maybe provide some in the comments, definitely give your feedback on that. If you've got knowledge in this space, in this area, definitely share with everyone, because the whole community can definitely be helped by that. So thank you all again so much. You are all awesome, and we will see you next time on Stock Talk.